Hey, what's up, beautiful people? How y'all doing? It's Wisdom Talk. I hope everybody is fabulous and blessed and highly favored. I just want to talk to y'all real quick. We're coming up on tax season. Some of y'all, look forward to tax season. Y'all get y'all tax returns, get all that big money, and go buy TVs and big crit, buy that foreign and repo that bitch. Like y'all, some of y'all love tax season. I'm here to break the myth because y'all know that's what I do. So, a little bit of wisdom for y'all. First of all, a tax return. Anytime you go into a store and you get a return, you return it, you get your money back, right? A tax return is the same thing. A tax return is you paying, the IRS is saying, you overpaid us. Here's some of your money back. If you get a tax return, that means you overpaid the IRS. Who in their right mind wants to overpay the IRS? Who wants to overpay taxes? It's taxes. It's the what is it? The Lord. Stop overpaying in taxes. You shouldn't look forward to a tax return. Like those who don't really like tax season don't get tax returns. I haven't got a tax return in about 6 years. But that's because I learned the rules. I learned how to play the game. And that's what I'm here to tell y'all. I've talked about positioning a lot. I've talked about life is like a game of chess. If you understand how the pieces move, you can move the pieces to where they benefit you and they protect the queen, okay? But you got to know how the pieces move. You can win the game with a pawn if you know how the pieces move and you know your opponent. So, taxes. Tax laws were written by business owners. Tax laws were written by business owners. Majority of the people in our government, Democrat, Republican, I don't care. Majority of those politicians, the senators, the House of Representatives, even the president, they all have businesses. So who do you think tax laws benefit? Business owners. Business owners. One example. A lot of y'all have children and you look forward to getting your tax return because you claim your children as dependents, okay? Did you know? Well, let me go back. So when you claim your children as dependents, I think the earned income credit is like $1,000 per kid or something like that. It's like if you got 2 kids, then you get extra $2,000. It's something like that. I'm not a CPA. I'm not a certified public accountant. But I understand tax laws enough to know what side of the equation that I want to be on. That's why I own businesses. I own multiple businesses, and I got a CPA that keep all my stuff in order. But here's the thing. As a business owner, I can write off my kids. Not the earned income tax. That earned income credit is for people who earn income. For employees. If you work for somebody else, you're an employee. You have earned income. That means you get that credit and you claim your kids as dependents. From my understanding, the credit is only like $1,000 per kid as a tax professional for the exact amounts. But this is just an example of how I'm supposed to show you tax laws benefit business owners. As a business owner, I can write off $12,000 per kid because I can pay my kids as contractors through my business $1,000 per month. is 12 months in a year, that means I can write off $12,000 of expenses instead of $1,000. Do the math. If you work a job, you claim your kids as a dependent. If you own a business, you claim your kids as a contractor and get a lot more to write off. That's more money that you can offset. Okay, that's just one example of things that you can write off as a business owner. And understand, you having a hustle. Now, understand, all of us, black and brown people, most of us got a hustle, okay? Most of us got a business. But the way they get you, the way you got to understand it is your paperwork. And that's what I teach all my clients. Y'all know I'm a business consultant. I teach all my clients, it is your paperwork. If you incorporate your business, go to the Secretary of State, your state. I'm in Texas, but right now I'm in Las Vegas, Nevada, on business trips, because I get to write off everything. I keep all my receipts. I write off all my food, all my travel, everything, because I have a business, okay? The rest of y'all, that's a vacation. I don't take vacations. I take business trips. I find a way. We doing a business meeting. We doing something. But I was actually out here dancing, so it really is truly business. In Vegas, we was dancing in Vegas. But there's so many things that you can write off as a business owner. So here's what you have to understand. Paperwork and having your foundation set is a big key. So the first thing you want to do is incorporate, get your LLC. You do not want to be a sole proprietor. Now, there are certain benefits to being a sole proprietor, very few in the tax level, okay? The way you structure your business depends on the taxes, okay? How you want to be taxed. There's an S Corp, there's a C Corp, there's an LLC, LLP, sole proprietorship. Most of y'all, if y'all got a side hustle, if you got an MLM company, you are a sole proprietor because you're using your social security number instead of an EIN number. An EIN number is a social security number for your business. That's you telling the IRS, give them away for free, okay? The IRS said, you got a number now? You want a number so where we can tax you? Yeah, absolutely. You can have one for free, okay? The EIN number is your business's social security number. When you have a business, you incorporate your business and do it the right way. Get your paperwork in order. Incorporate your business. Get your EIN number. That EIN number is what you use to open your business account, your business bank accounts, all of that. All that structure, once you got all that in order, and you got your business money separate from your personal funds, if you go buy hair, you better determine, okay, if I'm buying hair for a music video, I can write it off. Because it's a part of my wardrobe. If I need a certain look, it's a part of my wardrobe, okay? When I go shopping and I need specific clothes, I need certain shoes for the video shoot, that's a part of my wardrobe. That's a tax write-off because I have a dance business, okay? That is a tax write-off. But again, there's so many things that you can write off. The kids was just one example of that. But I want y'all to understand tax season and tax returns is for broke people, okay? Broke-minded people think, I get a tax return, and then you go buy another TV. You go buy, and you just put it right back in the economy. That makes no sense. Come on, do the math. Read, study to show yourself approved. And that's what I'm here for. I want y'all to learn how to play the game and position yourself. When you understand the difference from a liberal and a conservative, that's a whole nother video. We start talking politics. But liberals, the liberal side or the Democrats, liberal, all that, they want to take the money, the collective funds that everybody pays in the taxes and spread the wealth, the Robin Hood syndrome, okay? They spread the wealth to all the lower people in the community, which is fine, okay? That's the liberal. The conservative, they want to conserve all the funds and hold it and distribute it to specific people. That's a conservative. That's usually the Republicans. Republicans believe Don't take my money and just give it to everybody. Let me decide who I want to give my money to. That's what Republicans believe in the lowest of explanation. Okay, that's a whole nother video. But when you have that understanding of how things are distributed on the economy level, then it makes sense why you need to be in position. Like, I live in Texas. Texas is a conservative state. Texas is a Republican state. The Republic of Texas, 1845 or whatever year. I don't know Texas history. I don't care that much. But the Republic of Texas is a Republican state. That means Texas is very business owner friendly. They'll let you make $1 million in your business before they even start charging you taxes. So why not have a business and put yourself in position? You know, they conserving the funds for business owners. I'm not gonna get no money as a low income. You know, that's we're not a democratic state. They don't care nothing about the community like that. They care about business owners. So why? Okay, I need to just be in position to own a business because I'm not gonna get anything as a low income. As a matter of fact, when I was low, when I was really down and all felt like I was out, I went to my state and asked for emergency assistance. They told me, no, you have assets. I had a car and I had a piece of a job that was not paying me enough, okay? It wasn't enough for me to pay my bills. But they said, you have a job and a car. You do not qualify. I didn't ask for I didn't come and ask for, consistent help. Like, it ain't like I'm asking for food stamps or, I'm asking for monthly assistance. I asked for emergency assistance one time. They said, you don't qualify. My state told me that. At that point, you know what, let me get on the other side of the equation. As a business owner, I qualify for a lot, okay? Especially with all these new pandemic stimulus packages, I qualify for a lot as a business owner. My state told me I didn't qualify for anything as a low-income individual. That's the difference between conservative and liberal. But when you understand how it works, just understand how to play the game and position yourself. Be accountable for you. So, for all those that's excited about tax season, for those, if you're on the right side of the equation, it's just more work that you got to do and more to think about. But y'all be blessed. If you got any questions, leave them in the comments. Like, share, subscribe, share the video. Anything you want to know, you reach out to me. Go to my website. My consulting company is Legaci Services, for those that don't know. But love y'all. Be blessed. From Las Vegas.